Hello guys, in this video I will try to give you an idea about trading, what we call trading the high highs. Now what does it mean? You know, any stock like a company, some years, let's say some company, it was like $20. In some years it reached, let's say, $50, and then other years $50 goes down. Okay, now 50, let's say 40, 30, and then it becomes trading like 30, 40, 30, 40. And then 1 year a new trend begins. Let's say this trend begins with 45. We said that the stock has stopped at $50, but other years it goes down. Okay, now why it goes down? Because some people sell their shares from this company. Okay, they make profit. Okay, most of the time these guys are big guys. They are not small guys with $50,000 or $100,000. Okay, these guys, if they are mutual funds, they have billions of dollars. That's why you see big companies. Okay, when there is a move, $10, $20 in the stock, it means that there are someone or other, like mutual funds or pension fund or institution traders or something like that. They have too much money to move the market. Now, whenever the price reaches 50 and goes after 50, okay, this is what we call trading the high highs. Okay, and for me, since I am doing swing trading, I'm following those trends. Okay, those trends that are strong. Now you tell me how they are strong. They are strong because first, this company, you see the history. Okay, 1 year, 2 years, or 10 years, or wherever, you see that this company has never reached that price before. Okay, so it's a new high. Let's say it is let's say 3 years ago the stock was 50, but let's say today it is 40. Okay, so but for me, I'm not buying a stock that it is going down. Okay, it's rare and almost never. Now why I don't buy stocks that are going down? Because some people, like beginners, they think that when the stock is going down, it's a good thing, it's a discount. So these beginners, because they don't know how to trade, what they do, they buy these stocks where the big guys are selling. Okay, the big guys are selling. How can you buy against them? They crush you. Okay, now this is one version. Since the mutual funds are just an example of mutual funds. Why I always say mutual funds, it doesn't mean that they are always mutual funds, because we don't know who is selling, like selling off or buying long. But when we say mutual funds, because we know that mutual funds in America here or everywhere in the world, they have the biggest part of the market. Now why? Because everybody buys mutual funds, and they told them, oh, mutual funds are diversification. Okay, you should this you find it a lot in investing, and you say diversify your classify. But believe me, when the market is down, okay, it's rare. Diversification is rarely a good thing. Okay, let's say what did happen in 1987. Okay, Black Thursday or Black Friday or something. All the market lost 20%. What's the thing that you are going to do? Diversify. Almost everything is down. So in this thing, sometimes in general, what we call a bull market. What does it mean, a bull market? It's just the mutual fund are buying too much, and you find that there is a big advertisement in TV, in CNN, CNBC, websites. It means that those mutual funds and all the people that are market, they push the public to buy, okay, and they give them like reasons why. Oh, the market is in a bull, buy. Okay, that's why you see almost all the stocks going up. Not all, but almost of them. Okay, now when the market is selling, there is a selling off. Okay, it's the same thing. They ask you to buy because it's an opportunity. Okay, here is the thing. I will repeat what I say about the stock. The stock, when it reaches, let's say it reaches $50, it was like $30, it goes 40, it goes 50, and then it stops. This is what we call the resistance line. Resistance line, what does it mean? It means the price resists. There is no buyers after that. It means mutual funds and all the people who are buying, who bought before, they stop buying. Even the public, they stop buying because they are scared. They see a big line, which is the trend. The trend is so high that the people, you see it on the online and the CNBC and the CNN, and they begin to predict that there is a sell-off. Okay, this is true. This is true that most of the time when the trend has ended, no one knows when, okay, except for those who make the trend. You know, there are people who make the trend who have big money, and the public helps them, okay? Because who are the losers? Almost all the losers are public. What does it mean public? Public, it is us, I, you, and everybody else. It means especially those who buy at the end of the trend. They see the trend. Okay, if you see a chart, you will see a big trend, 6 months, 1 year, 2 years, okay? And then, if you buy at the end, you will know by yourself that there is, you don't know when, 1 month, 2 months, 3 months, 6 months. And if you stay in that trend, there'll come one day, especially for those who don't put stop loss and they invest, there's come one day where this stock will lose 10%, 20%, 30%, to 50% in 1 day. So if you don't put stop, almost all your investment, all your portfolio is gone. Now, when there is beginning of the trend, let's say the stock begins at 40 or 45, if it reaches 50 and it continues, this is what we call trading the high highs. It means we are looking for stocks that becomes bigger and bigger and bigger. Now, just a question, okay? How for example, Google, from $100 it goes to $1,000. Just an example, okay? It goes to $1,100, and then it goes down, and then it goes down to 500 because there is a split. Okay? Now you ask yourself, how this 100 goes to $1,100 a share? How? Because each time it hits, for example, Google was $100. Okay? So when it goes to $100, and then let's say the highest Google has is, for example, 120. It goes down 110 or $100, $5, for example. But one time there is a beginning of a trend, and for example the resistance line is 120. Okay, what will happen is that when some people, mutual funds, pension funds, institutional funds, begin to buy Google at that time, let's say 2007, 2008, or 2009, okay, when they begin to buy, when they reach 120, because they are buying, it breaks this line and it goes so quick. Now, people who buy at that time, this is what we call trading the high highs. From 120, in few days, believe me, few weeks, it can go from 120, it can go to 150, 170, or 200 in few days. But here is the problem. If you are not there at that time, okay, you will never make it, because after a few days, few weeks, when it was from 120, this resistance line, it breaks the resistance line, the price breaks the resistance line, and it goes to 180 or 190 or 200. It's over. Now you come at the end because of the media, okay? Because the people who buy at $5, $10, these big guys, institutions, mutual fund managers, and a lot of guys, they buy when the stock under the resistance line, okay? And when they move, all the professionals they join, like swing traders, like some investors, they see a big move, so they jump. Now they don't know, okay? They don't know it's a true move, but they try, okay? So whenever a stock reaches a resistance line and it shows a new high, this is a possible trading, and this is one of the best trades maybe you have done in your life, because this is how the market moves up, when it breaks the resistance line and it goes up. Now, how do you search for these? Okay, there are a lot of criteria that you should use. Not just the resistance line, because resistance line, sometimes a lot of stocks, they reach resistance line, they go little bit and they will go down again. Okay, and you tell me, oh, I have seen a lot of stocks going up, reach the resistance line, and they make new high, and then a few days they go down. Yes, those, it is just made of some maybe floor traders, or some people who buy predicting future. Okay, they try to predict the future. But for me and for all the other swing traders, we don't predict the future. We don't buy when it is under the resistance line and wait. Okay, this is not a best strategy, because maybe it will never reach this resistance line, and you lock your money for months, 1 month, 6 months, 1 year, 2 years, 3 years, and you become like an investor. We swing traders, we are not investors. We don't buy because of the company is good. We don't buy because of the fundamentals, because of the market, because we buy when we see a sign, when we see a new high in any stock. It's possible that this stock will go higher and higher. Now, you asked me, for example, has something happened to this company when it reaches a new high? No, it's just someone who's buying. That's why some people always they are confused. Okay, they buy the best company in America. Okay, the best. Take the best company in history and everything. You see that most of these stocks, they don't go that fast. They go slow. And in order to have $10 or $20, you can wait 10 years in order to get this. But I will show you some stocks. It double in a few days. I have before I have shown a stock which is called Lake, L-A-K-E. It goes from $11, it goes to $29 in 3 days. Then it goes down, so you should put stop loss in order to exit with 200 or 300%. And this is not a penny stock. It's a stock that it is 11. Okay, 11, and then it goes up to that price, and it's okay. Now, trading the high highs, it means that the stock, when it reaches a new high, try to put this into your portfolio and try to follow. If it continues to go up, you will see that in a few days it will go so high that you can make a good profit. And this is most of the swing traders they do. Now, some people they say, why I don't buy when it reaches the resistance line, it goes down a little bit and then I buy. This is the beginner's idea. They think they can time the market. What does it mean, time the market? It means they buy from the lowest point and they keep the stock until the highest point, and they say, oh, this is the trade. It will never happen like this in true trading. This is what we call trading from the past. When I give you a chart that you see a big trend up, okay? So when I ask you, when do you want to buy? You begin to look what is the bottom line, what is the bottom price, and you say, oh, Kareem, I buy from this here, $10, and then I will sell in $50. This is what I do. But is this possible? Okay? It's rare. Okay? And if something rare, you can't make it as a business, because you will lose a lot. Because if the stock is doing a downtrend, it go down, it go up a little bit, you buy, and then it go down, and then it go down, and then you begin to lose money, until you get fed up with the stock and you sell it with a big loss. Okay? For us, no. We buy on the highs, okay, when the stock price hits the resistance line, and we wait. If the stock is good, we are right, we stay. But if it goes against us, we exit with a stop loss. That's it, what we do. Okay? So hope you understand this lesson. And if you have any question, as usual, comment or send me a private message. Thumb it up or subscribe. If you need more information, you can send me a private message or whatever you want to do. Thank you very much and have a nice day.